Though there were a couple of dud numbers, the unemployment rate unexpectedly rose from 5.2% to 5.5%, while fixed asset investment may have rebounded strongly, it still fell far short of forecasts. Monday's Chinese data counted where it mattered most. Industrial production surged from 7.3% to 35.1%, shooting past the 31.2% forecast. More importantly, retail sales rose from 4.6% to 33.8%, ahead of the 32.0% estimated. That's helped the markets continue to weather the recent movements in bond yields, which saw the yield on 10-year treasuries cross 1.6%, its highest level in more than a year last Friday. Whether the markets can continue to show this newfound resilience is in part going to be determined by what the Federal Reserve and Bank of England say on the matter this Wednesday and Thursday, respectively. Though the Federal Reserve has tried to brush off investors' concerns over a surge in inflation once the US starts to open up and the economy begins to recover, that didn't go down so well last time Jerome Powell tried it. The markets were concerned by Powell's lack of comment on what the central bank would do if bond yields continued to spike. With that in mind, what he says on Wednesday about the issue, alongside inflation and interest rates in general, is going to be of prime importance to the markets in light of the Biden administration's stimulus success. The markets are caught in an interesting place given that the gains, especially the Dow Jones's gains, record-breaking gains, have been predicated on the success of Biden's American Rescue Plan and that $1.9 trillion stimulus package. At the same time, the thing most endangering those gains is now a fear of inflation because of the success of that bill and the positive impact that's going to have on the US economy. So it's an interesting moment for markets, given that their anxieties and their record-breaking gains are coming from the same source, essentially. Which makes it tricky to navigate, especially in a week like this. Any other comments around impending shifts in monetary policy will also be crucial to the health of the equity markets in the second half of the week, especially with the Dow Jones, as I said, in that all-time high territory. The Fed will also be revealing its latest economic projections, which will again make for interesting reading, given that they come days after the American Rescue Plan seal of approval and now well into the USA's vaccination program. Before Wednesday's Fed main event, Monday's Empire State Manufacturing Index is expected to rise from 12.1 to 14.6. Tuesday's retail sales, which are arguably the week's most important figures, are forecast to shrink, however, from 5.3% to minus 0.5%, with the core reading falling from 5.9% to 0.2%. The other side of the meeting, you've then got the Philly Fed Manufacturing Index on Thursday, which is set to jump from 23.1 to 23.9. The usual Thursday jobless claims, meanwhile, are looking to drop from 712,000 to 700,000 on the dot. All of this comes at a crucial juncture for the Dow Jones. It's now making eyes at 33,000, managing to rise and rise despite investors' inflation concerns and those sort of early March major wobbles about bond yields and rising inflation and interest rates and all of those things previously mentioned. The tone struck by the Fed on Wednesday then could make or break the Dow's record-breaking run heading into the second half of March.